2024 is around the corner, and on top of gifts, Christmas lunch, and making small talk, we also need to consider our investments. What we do today will determine if we show up in a Lambo next Christmas. So in today's video, we're going to be talking about value, where to find it, and what it's going to look like in 2024. We also need to discuss oil. The oil trade is screaming recession, and we're going to break down everything and what it means for the market. But the big number on everybody's mind is CPI. Consumer prices rose, and that means inflation is back on the rise. But the devil is always in the details. So join us today as we dive into the details and break everything down about stocks and the financial markets. Hello, ladies and gentlemen. Welcome to the daily recap show where we talk about stocks and the financial markets. If you like this video, please subscribe, hit the notification bell. Let's get into it. Quite the trading day today. Google and Meta were the only stocks that let us down, as well as the entire energy sector, but more on energy a little later. Looking at sectors as a whole, we had semiconductors, crazy performance after a 2% up day yesterday. Financials putting in a good day, as well as technology. And look at this, energy, materials, and GDX. Miners as a whole let everybody down, and that was mostly on inflation concerns, and that had to do with CPI. We had CPI data come in today, and the headline CPI was what everybody was sort of up in arms about. 0.1% increase month over month versus 0% consensus. In other words, inflation increased ever so slightly. Everything else came in line, especially core. We have to dive a little bit deeper into this number right here because there was a few things that happened under the hood. So this is the CPI print table that the Fed releases, right? So firstly, we got 0.3% CPI, right? It's actually 0.28% because of rounding. And if you add these four right here, shelter, used cars, trucks, and motor vehicle insurance, right? It adds up to 0.31. So long story short, the entire CPI report, right? Excluding these four things right here, shelter and cars, is actually negative 0.03. We actually saw deflation in the entire report as above. And look at all of these right here. Everything from apparel, household furnishings, all of this was deflationary, guys. And this right here was not inflationary at all. So as a whole, the entire report was deflationary except for shelter and cars. Now, I do understand that shelter and cars are a pretty big expense for most people, but there's just a lot of lags in the system that shelter and cars only feel much later on compared to food. There's definitely 6 to 12 month lags that these have compared to stuff like apparel. And based on what we're seeing, I think Jerome Powell tomorrow is going to come out. He's going to sound very hawkish. He's going to use that number in the sense that inflation is rising and we will cut rates if need be, but he's going to keep rates on hold. That's what I'm thinking. But looking ahead at yields, what they did on the day, you think that with inflation increasing, yields would spike. They didn't. Look at the 10-year. It was actually down 0.7% of the day, nearly 3 basis points. But what did change was the Fed fund rate futures. The rate cut now moved from March all the way to May. So we're getting the first 25 basis point rate cut in May, but we're still getting 5 rate cuts all the way to December 2024. That is still on the plate. We are about six months about the first rate cut, and I have some data here for you guys. And this is pretty much Carson Research, what the core bonds, so the ticker AGG does. 12 months, 6 months before the rate cut, 12 months, 6 months after the rate cut. And pretty much you can see returns of 3.5%, 7%, 4.8%, and then 2.1% before and after the rate cut. Now, the duration on the AGG is 6.13 years. If we actually look at the TLT, it's 16.91 years, which is an increase of 2.7. So you can just multiply these numbers by 2.7, and these are the returns you can expect from TLT. Obviously, all in hindsight, but just some data that we can use. Now, I am bullish on bonds. I believe it's going to be a great trade in 2024, and I think it's good for downside risk. Looking at the majors today, something we haven't touched on, Nasdaq up 0.82%. Crazy trade, especially coming from what it did yesterday. Today, S&P 500 up 0.5%. IWM was actually up 0.2%, but it fell in later days trade, in afternoon trade. And look at the best performing sectors today, guys. It was growth in mid caps, small caps, and large caps. Large caps as a whole just outperformed because, yeah, that's what the Nasdaq mostly is. But markets are moving towards the 4,700 level because investors are bulled up. Look at the AAAI survey, 47%, 48%, 45%. And guys, you can only start to get really worried when this gets to 50%. When it gets to the 50% mark, that's when you can start saying, hey, maybe I should decrease my exposure or wait for a pullback. But as it stands right now, bullish sentiment is needed in bull markets. Let's talk about oil. Oil was a big one today, down 3% on inflation news. The market saw the headline and it was a bloodbath. crude oil stocks down, but this does provide opportunity because energy stocks were down significantly, and energy is the cheapest sector in the S&P 500. 10.6 PE, 1.4 EV to sales. Look at this free cash flow yield, 9%. Let me put this into perspective. $1.4 billion company, it has a market cap of $1.4 billion. It means it's making revenues of $1 billion, and with a 9% free cash flow yield, it's making about $100 million in free cash flow that it can distribute to you as the investor in dividends. But it's not all guns and roses. There are risks ahead. Earnings for energy, negative 25.1% is expected for Q4 2023. And I think this is why oil is trading at a 10 PE, because a lot of this is actually factored in, is priced in. We could be seeing the bottom for energy. If you actually look at the calendar year 2024, energy is expected to report about 4.4% earnings. This is opportunity. A lot of bad news is priced in, and what you really want to do is look for oil producers with extremely low leverage. Stuff like ExxonMobil, Pioneer Resources, and Chevron. Let's talk about the S&P 500. Crazy stuff. Ed Yardeni from Yardeni Research, ambitious price target, calls for 6,000 S&P 500 in 2025. Absolutely crazy. This is where we are right now, 46.41. For this to materialize, right, I think he needs to get 12% year-over-year growth. So like 12% in 24 and then 12% in 25. And in the last 5 to 6 weeks, this rise in the S&P 500 has purely been multiple driven. It's just been an increase in multiples. This is actually normal. If the earnings cycle is to turn, if earnings are to rebound, if earnings have bottomed, normally what happens is we do see multiple expansion when earnings have troughed. So we see multiple expansion and then earnings come as a result. And this is what we're seeing because S&P 500 earnings are expected to grow about 11.8% in 2024. So this is where his target might be coming from. If we do hit these targets, the multiple expansion we're seeing right now is completely justified, especially if we move into 2025 with an 11% plus earnings. Now, I do think that these figures are fairly rosy, 11.8% for S&P 500, very, very rosy figures. In my personal opinion, I think anywhere from 8 to 9% is what we're going to do next year. And this is how I see earnings in 2024, right? I think we're going to see a sideways, mega cap 7, a slightly up 493 in 2024. If the 7 stocks move sideways and multiples on forward earnings for the 493 flatline at 15x, okay, very reasonable. Just on EPS growth, the index should trade 5100. Now, I think what Yardeni Research is thinking is that even though the index should trade at 5100, there's going to be further multiple expansion and further pricing in of the earnings of 2025, and that should take them to 5200, maybe 5300, something along those lines. Very, very ambitious price targets. At least for me right now in 2024, I'm expecting 5100 with the earnings cycle to look something like that. Hopefully I'm wrong and we go higher, but not lower. This actually aligns with the presidential cycle. I mean, the 4th year of the presidential cycle is normally pretty bullish. The 3rd year is the most bullish, but 2024, the 4th year, should be fairly bullish. We are expecting about an 8 or 9% increase in the S&P 500. But let's actually look at the metrics for the S&P 500. And according to BOFA, statistically speaking, the S&P 500 is expensive. Let's have a look at the Schiller PE. Trading currently at 30.8. The average is 17.4, 77.1% above the normal average. Median forward PE, so pretty much the middle of the road, essentially the average, is trading at 15.5, right? It's owned at 0.03%. And what this pretty much represents is the equal weight. But in almost every other metric, trailing PE, gap PE, forward PE at 19.3, assuming earnings they're using there, probably 10%. EV to EBITDA, price to earnings growth, everything is really expensive in the S&P 500. And that's why, if you really want to outperform next year, go ahead and try to find value sectors like I showed you today. XLE, pretty cheap. Energy is pretty cheap. Com services looking pretty cheap, by the way. And a large part of this expensiveness in the S&P 500 has to do with technology. Everybody is bulled up on tech and the AI trade. The thing is, AI is incredible. People see its use case, can see forward to what it can produce and bring productivity. And I think that's a part of Yardeni Research's thesis, is the productivity that AI is going to bring. People are bulled up technology, and even though tech has been expensive historically, been a great trade this year, and if you have been on technology like I have, you've made a lot of money. So just because something's expensive doesn't mean it's not tradable. Let's look at seasonality, and looking at OPEX seasonality, we normally see a fairly positive week, up 0.5% in OPEX 73% of the time. The week after, even more so bullish, up 0.8%, 75% of the time. Very bullish stats right there. And buying leads to more buying. We are in a seasonally bullish period. December is very bullish, as you can see right here. This is the seasonal trend. Normally go ahead and make a dip about the 11th or 12th trading day in December. It looks as if we actually made the dip early this week, late last week, because we're up 1.67% for the month so far, well ahead of seasonality. We could revert to the mean right here, but I do think we're going to see higher price action into December. Let's have a look at Gamma and exactly what I predicted over the last 3 to 4 trading sessions. Our 4600 Gamma call resistance has now moved to 4700. A lot of traders have repositioned their Gamma at the 4700 level, and this just means we're going to start trading the 4650, 4675, 4700 strike. And have a look here, 4750. There's a lot of Gamma building right there. There's also a lot of Gamma building on the 4800 strike. So, and this was in large part to the extra 400 million injects that entered the options chain today. There was a huge amounts of call buying, and that's why the call resistance pushed up to 4700, and it's why I expect the SPX to trade 4700 in the next week. And this is the Gamma heat map, and you can see right here in this 4700 level, sort of around here, 4670, 4700, there's a lot of Gamma. This sort of darker blue area, there's a ton of Gamma right here at 4550 all the way to the 4600 level, and then above here it's very neutral. So that's exactly what I'm expecting. We're probably gonna move higher as we've done the last couple of weeks into the 4700 level, where we're probably just gonna go ahead and chop around. So more upside for us to the 4700 level. That's my prediction. Let's hop on the chart and have a look at that. So here's the year-to-date chart. You guys know that for weeks I've said that if we close inside this area right here, which we have, very bullish to make all-time highs. We've actually gone and closed above it. Very, very bullish. The highest close in 2023, and that probably means we go ahead and make new all-time highs. That is my prediction. A close above this level, and this level means we go ahead and break new all-time highs. But let's take it 1 week at a time and have a look at today's trade. And the candle in today's trade right here, we opened up, bears took us lower, but then bulls came up, took us all the way up, significantly higher than where we should have, and then we actually closed at the highs. Very, very bullish candle, especially the fact that bears did try to take us down on the CPI news. Bulls brought us all the way back up, and then we just absolutely rallied. Closed at the high. No profit taking. People are holding their positions overnight. Closed right at the high. Looking at dark pools, there wasn't much to discern from the S&P 500. We did see a pretty big close at the end of day. Probably bullish. It is always bullish. There's some huge support right here and right here at 459, 460 level. Looking at the Qs, there was a phantom trade that came in right there. Very weird. You know, again, huge support right here as well as right there. So big amounts of support and huge support right here. You know, the amount of volume it's going to need to break this zone, quite significant. Looking at the iShares, this is iGov, the bond ETF, biggest trade since inception right there. This trade's very similar to TLT. It says international treasury. It's mostly just longer dated duration treasuries. Huge trades took us short, but now we see another big trade right there. Could be closing those positions off, but for every buyer there is a seller. So someone is long the treasuries right there. So again, if we get into this level, this is where there's a huge amount of supply. So, you know, again, this 50 handle, we could definitely see some buying into the 50 handle in iGov. Looking at the data for tomorrow, we have the big ones, PPI, producer price index, and then the FOMC decision. But if you've made it up until here, guys, thank you so much for watching. If you like this video, leave a like, leave a comment, subscribe, hit the notification bell. You know I love you guys.